please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
This is Bazaar Morning Call, live from the CNBC-TV18 headquarters in Mumbai.
Hello and welcome to Bazaar Morning Call. I'm Lata, with me Anuj and Sonia, and what a grand GDP number that was. I mean, I was salivating over the 8%. I haven't done that for now, 2 years? It was 8 quarters ago that we had an 8.3 number, and then since then we've only been speaking about slowdown and disruption. So that 8.2 number felt very good indeed on Friday evening. Then, you know, sobriety returns. We also got tax collection numbers, GST tax collection numbers, plus overall tax collection numbers. That was a disappointment. I mean, if you grow so well in the first quarter GDP, manufacturing as well, and services, then, you know, the non-agri GDP was fairly strong. For that, you know, a tax collection that was even below the previous month and below the year-ago number for August, you know, it kind of left a bad taste in the mouth. And then over the weekend and this morning, you have further cues which are somewhat difficult for us. Dollar is expensive. It was at 94.5. Now it's gone to 95.12. Crude prices have once again reaching out to 78. So, and then of course, you know, whatever, it may be Canada and US or whatever, but the world is worrying about that tariff, whether we like it or not. So looks like that superb GDP number is not quite going to buck the bulls.
Well, don't lose heart, Lata, because the GDP numbers are lagged indicators, but some of the lead indicators are also very strong. The commercial vehicle sales have been exceptionally good this month. Tipper demand has been so strong. I mean, that's construction demand, right? So tipper truck demand is good. But anyway, before that, there was a kiss involved. I mean, is that only reserved for GDP numbers, or it's also for if inflation cools off, you know?
Okay. No, well, I think it was because of that 8 number. You know, that number was like exceptional because we've not had it for a long time. So that's why. Well, you know, actually, you spoke about tipper demand. Now, tipper demand, while one can rejoice over it, it also comes with this construction ban in 3 states by the Supreme Court. So, you know, Anuj, there is a lot of fundamentals for the market to chew.
Yes.
And as it is last week, even if the contract was superb, last week it had its brows knitted, the bulls, didn't it?
It did, Lata. Good morning, Sonia. Morning. You know, one of my favorite cues is my Time Hop app. I open this every morning just to see, you know, 1 year back, 2 year back, what kind of cues did the market have and what kind of reaction the market had. Last year, same day, you know, everyone was feeling despondent about that 5.6% GDP number. And the market actually had a massive rally that day after a gap down. So today, could it be a bit of a reversal? You know, you have a bit of a gap up, and then after that, the market sees lower levels because this is, you know, at the end of the day, the lag data. So I think there's a good chance that you want to see if this gap up fails, and if it does, with the kind of cues that we have, Asian market cues, crude, there's no point chasing gap up. You want to wait and see if that gap up actually fails, and you want to try a short trade perhaps with days high, with all-time high as stop loss. The risk reward perhaps is in your favor now. If the all-time high goes, you're stopped out. But a correction back to 20-day moving average will be healthy for this market, 11,500 perhaps, because we have had 2 back-to-back strong series, and it's just, you know, the market's just run up way away from its averages. The bank nifty looks slightly weaker, obviously, because of challenging macros, the currency, rupee, bond yields, all of that. The template of 1 step back, 2 step forward is intact, so perhaps you would want the market to take a step back so that next 2 step forwards are taken. And just one more point, IT and pharma really are the firm leaders for this market. Because of how the rupee has moved and other factors. So that's the 2 indices or 2 sectors where you would want to buy all declines. But for the market overall, I would want to see if, you know, the gap up is actually sold into or not.
Also today, the US markets are shut in the evening on account of Labor Day. So there's a long weekend. When, as they say, when the cat is away, the mice are at play. So you think that would also affect our market?
that could change the equation for last hour, for sure. So, you know, let's see what happens. First of all, let's see what happens through the day today. But, you know, the more you look at the data, I take the point that Ashok Leyland sales look good, but, you know, or CV sales look good. But the other auto sales didn't really inspire too much confidence, even if there was Kerala factor and all. But you know, overall, it won't hurt you to take a step back, perhaps, after the kind of big run that you've seen already.
Okay, and as we've been discussing, the GDP numbers are the lag data, right? Why is it not inspiring as much confidence as it was when the initial tick came?
Okay, well, first of all, I would still say it's inspiring because the market knew about the low base, knew about everything, and still they were guessing 7.7. It has come a good 0.5% higher. I mean, it's not 7.9, then it would have been less cheerful. This is 8.2, you know, over our poll, 0.5% higher GDP we've rarely seen. And let me look at other positives as well. Usually aggregate demand picks up ahead of an election. I mean, either there is more cash spent or the government is in a spending mood, even legitimately. So both cash spending also happens and government programs also tick up. There's rupee depreciation. I think that's very important. Rupee depreciation is actually very good for domestic manufacturers because imports become expensive. So, you know, they all get a pricing power and even import substitution happens because the imported product becomes expensive and exports also do well. So my sense is that I'm not all that despondent as some of the economists are. But on the flip side, they make some very valid points. One that, you know, if you take both years together, FY17 to FY19, the average works out to 7.1%. And then again, the agri-deflator is, you know, rather low. That is the pain point, you know, rural demand. Quite clearly, not exactly entirely rural demand, but the agri part is in very, very deep distress, and that you have to take on board. Some kind of steps are genuinely needed for that part of the economy. That is not the entire rural sector, because the non-agri allied factors did extremely well. That is, you know, forestry and products like that, allied products. The other important point to note is that you now have rate hike definitely on the table, and 3 or 4 reasons for that. One, the growth has picked up. Now it is not an economy that deserves accommodation. So the Reserve Bank will be bolder in terms of hiking rates. Secondly, the rupee depreciation and the crude, that will have its own impact on increasing prices. Taxes have genuinely failed us, and that will mean there will be a fiscal deficit because you can't pull back a government. You don't normally succeed in pulling back a government in a pre-poll quarter. So in spite of the taxes not ticking in, the government may go ahead and spend, and that can, you know, lead to a fiscal deficit, not just in the centre, but in the states also, because we are now very vigorously talking about simultaneous polls, at least in a few states. So, you know, all this will be very big worries for the central bank, and therefore the rate hike as early as October is right back on the market's mind. There was one economist who went to the extent of, probably was just teasing me, was asking me if we should think of a double rate hike in October. I mean, should we look at 50 bips?
But that's also because even before this number came out, a lot of people were expecting a rate hike in October, right?
October was 3 back-to-back rate hikes. People were not very sure. But with
now,
this
with
kind
this
of
number,
growth and this depreciation, it becomes a very real expectation.
Okay, well, on that note, let's kickstart the trading week. Let's tell you what our wise experts have to say as you head into trade this Monday morning. Timothy Moore of Goldman Sachs says the MSCI India is currently trading at 19.5 times PE, which is the highest in the region and at a record high premium of 55%. They note that Indian equities have risen on an average in absolute terms and have traded largely in line with the region on a forward 1 to 3 month basis when the PE premium is 40%. However, Timothy adds that when relative PE premium reaches 50%, MSCI India has posted negative returns in absolute and relative terms on a forward 3 to 6 month basis, suggesting downside valuation risk at the current levels.
Okay, and now let's get to some money market views from Inbrahmata Veracity. Says, on the back of a stronger dollar across its peers, the rupee will trade with a negative bias. Thus, he sees the trading range for the spot USD INR pair at 70.80 to 71.20 for the day. Oh, that's big. I thought the GDP will bring in some dollars and therefore, you know, it won't go up to 71. But let's wait and see.
Okay, so let's find out what's happening in the bond market then. Ajay Magnolia of Edelweiss says with the sharp depreciation in the rupee, gilt yields have slowly but steadily risen towards highs last seen in June. He says the rupee trajectory will continue to dictate the bond markets and the slide may turn steeper if the currency depreciates further at the same rate. He sees the 10-year benchmark yield likely to trade in a range of 7.92 to 7.97 for the trading day.
Okay, slightly soft global cues this morning. Here's Nigel with the world view.
Well, that's right. The U.S. markets ended more or less flattish in Friday's trading session. But remember, the month of August was very, very good, both for the Dow and the S&P 500. Both of them ended with gains of around 2 to around 3%. That's the best we have seen in the last 4 years for the Dow and the S&P 500, while for the NASDAQ, it gained more than 5% in the month of August. Now, that's the best August that NASDAQ has had all the way since the year 2000. Now, if you're looking at the big winners on Friday, well, you had Apple as well as Nike. Both of them were the big winners. But the big losers as well should come up for you on the screen. So we had some of the Boeing as well as Goldman Sachs. Both those two companies, they were losing out. Remember, trade war fears are back on the table, and that's why we did see some selling out there. Coca-Cola, well, they had said that they're going to be buying Costa for around $5 billion odd. So Coca-Cola was under some pressure. That ended with a cut of close to around 1%. But on the flip side, Wipro, which owns Costa, that in fact did end higher with a gain of close to around 14%. European markets, well, they were shaky because in fact, the US and Canada couldn't come to an understanding in time. So that's why in fact the trade war fears were back. All those three indices ended in the red, while in fact even this morning, all the Asian markets, some of them opened up in the green. They've done a quick U-turn of sorts, and all Asian markets under some pressure. SGX Nifty as well is come off from the high point of the day. At the start of today, it was indicating a 30-point bump up. Now, a 15 to 17-point bump up is what it's indicating. Back to you.
So there is that worry about EM pain point because of the strong dollar. We have to take that on board very seriously because now we could well look like a double deficit country, current deficit plus fiscal deficit because of the very poor GST tax collections. But more on that later. First, let us savor the good news. The big story of Friday, the strong GDP data. We spoke to a whole host of economists and experts, listening to what they have made of the GDP numbers. Thereafter, we'll take a break and come back with the micros.
8.2 is still a good number. But it's like the curate's egg. I mean, there are good parts and bad parts. While I think we should all be very pleased with these numbers, especially because of agriculture and construction, two very labor-intensive sectors, we should be a little concerned that we don't go into a state of euphoria. Because my own sense is next quarter we'll be looking at something closer to 7.5%. As far as food grains are concerned, it's always hung around 2–2.5%. I mean, there's nothing. Practically all the growth in crop agriculture has come essentially from vegetables. So if you take the total GDP deflator and you correct for the low agricultural price increase, what you are getting is an enormous increase in non-agricultural prices, unacceptably high levels. So what you are talking about is not that agriculture, the farmers are making roughly zero additional income. They're actually getting negative real incomes. That's what it's saying. So when you're talking about headwinds, this is a big headwind.
My sense is that on the headline basis, the numbers which were on the GVA numbers could be actually maybe a 40–50 basis point impact, but the impact on the GDP could be actually higher than what we have estimated, and there's actually your 7.1 and 7.2% conjecture comes. So GDP obviously has been held by a stronger base, much more than even the GVA base, because we also had that indirect taxes and subsidies part which is contributing to that. If the central bank is not in favor of too much of depletion of foreign exchange reserves, it could look at other options to defend the currency if it continues to depreciate. And against that background, I think one of the possible options, textbook prescription, is foreign policy is a rate hike. So that is the thing. So that we need to see whether that is the thinking, or it wants to see some of the numbers play out before trying to stem a fall in the value of the rupee if it continues to do so.
Oil at 77 this year is a negative terms of trade shock. And remember, monetary conditions are beginning to tighten or have tightened in the last few months and may tighten more of the currencies under some pressure, and the RBI has to move. And the deleveraging is progressing, and that's going to have some dividends down the road, but we're not seeing credit growth accelerate sharply. So I think If we can end the year with 7.3%, which is our current forecast, I think India will be doing very well in a turbulent global environment. The 8% is in large part because you had a very weak base of the same quarter last year. But we had all built that into our forecast of 7.5 or 7.6. So the fact that it's surpassed market expectations suggests growth is really strong. I think it's easy to read the numbers and say industry is going at 10%, services at 7%, this is all manufacturing industrial led. My reading is exactly the opposite, because if you go back 4 quarters ago, the 10% industrial growth is on a base of 0.1%. In fact, in our view, the upside surprise happened on the services side, because services were contending with a base of 9.5% growth in the same quarter last year. On that base of 9.5% to grow above 7, I think was very impressive. We've been arguing for a while that some degree of currency depreciation is good, it's healthy. We've had a 6% real depreciation in the first 6 months of the year, and already in the second quarter, the drag from net trade, exports have picked up, imports are still strong, but the drag from net trade in today's GDP number is meaningfully less. It's the lowest in the last 5 quarters. So these things do pan out eventually. The more the exchange rate works, the less we have to curb aggregate demand to contain the current account deficit.
We're starting a brand new week, and we're starting with some mixed cues, you'd have to say. The SGX Nifty is absolutely flat. Some of the global markets have been a tad bit under pressure. Let's see how things shape up. We've had a pretty solid last fortnight for our own markets, but our research team is here to give you the list of top 10 stocks to watch as we head into trade today. Anuj, what are we looking at now? So
one red, one green, though the red is more of a gut feel more than anything else on M&M, because I believe the tractor number is the key for M&M, and there would be negative read through from Escort's numbers, and it saw big pickup in delivery selling on Friday, so that's why I'm interested to see the market's reaction to M&M. Torrent Pharma on the green side, it's a strong stock in a strong sector and has seen big delivery buying. Pharma continues to look good, so that could be interesting today.
Okay. Well, Sonia, the other big set are the auto stocks, auto numbers that came in for the month of August. How did they look?
So the big trend is that commercial vehicle sales have done really well. As I was saying earlier, the tipper demand has picked up, construction activity has looked good. So all the companies that have commercial vehicles in their portfolio may be in the green today. Ashok Leyland tops the charts there, total sales growth of 27%. The MHCV sales for Ashok Leyland were up by 24%. And the big read-through is light commercial vehicle sales have picked up substantially this month. It's a 38% growth. Tata Motors commercial vehicle sales were also very strong, a 26% growth. And M&M and Eicher both reported good commercial vehicle sales. M&M saw CV sales of 25%. Eicher saw CV sales of 33%. So that's really the big trend. Apart from that, the stocks in the red today could be Maruti, Hero MotoCorp and Escorts, because the Kerala floods and a delayed festive season has impacted the sales for many of these companies. For Maruti, total sales were down by 3.4%, worse than street expectations. Hero MotoCorp saw just a 1% sales growth because of the delayed festive season. TVS Motor sales were also lower than estimated. It was just an 8% growth, so single digit there. And Escorts has reported the lowest tractor sales since December of 2017. It could be an aberration because they've been reporting very strong sales so far, but this month has been quite negative. And as Anuj was also pointing out, M&M hasn't reported their tractor sales just yet, but perhaps there could be some pressure there.
Absolutely. Well, I would expect banks to be a bit under pressure for a bunch of reasons which we already discussed. A high growth always means that the Reserve Bank is more in has the elbow room to raise interest rates just in case that, it pushes up prices as well as the current account deficit. That will be the bigger worry. The other reasons are all well known: lower rupee and higher crude, which looks very much on the table, and lower tax collections, which again raises fiscal deficit fears. For the bunch of reasons, I think higher bond yields and therefore impact on banks and NBFCs as well.
Okay, that's on the banks overall, but on ICICI Bank, we have news in specific like that.
Yeah, in specific, and this is something which we broke on Friday when Mr. P.P. Chaudhary, the Minister of State for Corporate Affairs, spoke to Timsy, our colleague, And he said that all the Deepak Kochar companies, that's husband of Chanda Kochar, and the Videocon related companies are under SFIO scanner, under investigative scanner. So that includes New Power, Renewable, Supreme Energy, and some other Videocon companies. Therefore, you should expect that ICICI could be under more pressure.
But why would the ICICI shareholders have to worry? I mean, is it just a sentiment impact?
It's a sentiment impact.
Okay,
And I mean, you don't know, the fears of conflict could rise a little more. So it's only a sentiment. It's not an EPS impact, no.
Okay, obviously not. All right, let's move on. Here out in fact, the Minister of State for Corporate Affairs, PP Chaudhary, who spoke to my colleague Tim C. Jaipuria on all, all the property dealings by the Kochars being probed henceforth. Take a look.
Ministry has ordered inspection of books and papers. The 6 companies are under Section 2065 of the Companies Act 2013. This New Power Renewable Private Limited, Supreme Energy Private Limited, Pacific Capital Services Private Limited, Videocon Industries Limited, New Power Wind Farms Limited, and Janda Urza Private Limited. So the inspections with respect to all these companies are in progress.
So this is specifically to the ICICI, Videocon and New Power
Yes,
case.
yes. So all these inspection is in progress.
Okay, that's on ICICI Bank, but let's move on. Wipro is also in the news. They've completed an acquisition. Rima's here to tell us more. Rima, this was known, right? It's only the completion of this acquisition?
Yes, Sonia, absolutely. So the company has said that they have completed the acquisition of Alight HR India Services. This was announced during the Q1 numbers. What the company at that time had also announced that they had paid $117 million for the acquisition. The company they acquired had revenues of $160 million as of FY18. What the company in the press release has also said is that this Alight India HR Services has also won a deal of $1.5 to $1.6 billion over a 10-year period, which means annual revenues of $150 to $160 million, which is the same as Alight's last year's revenues, as well as what was expected from the company in the coming years. So this is not incremental news. It just gives investors an assurance that the revenue trajectory from Alight will continue over the next 10 years. It does not double the revenues. It just is a continuation, and and it gives you that assurance. So in that sense, it's not a big positive, but mild green because of revenue continuity.
Okay, thank you very much for that. And then, of course, the big sector that's going to be under pressure today because of the Supreme Court ban on construction in several states. Sonal, tell us.
Well, a lot of these companies like Godrej Properties, Sunteck Realty, Kolte Patil, and some of the EPC players like Ahluwalia Constructions and Capacity Infra will be in focus today because the Supreme Court order says that they ban all construction in the states of Maharashtra, Madhya Pradesh and Odisha. That is because the solid waste management policies are not in place. Well, while this order just says that construction is banned, we need to understand whether this is on under construction projects as well, or it's only for the new constructions. Also, whether it's only applicable on newer buildings, that is the residential projects, or also on the EPC projects like metro, rails. So this is something that we really need to know. While all this is in place, the Maharashtra government says that they have the policies in place and that will be submitted soon. I spoke to a lot of analysts that they say that this move could be a big blow to the real estate sector because already inventory worth 2 lakh crores is unsold and is undergoing some construction. So we'll have to watch out for what the exact timeline for these particular projects are. Back to you.
Well, I'm sure it's a big blow to real estate players, but I take the point completely about solid waste management. Maharashtra generates almost 23,000 tons of solid waste every single day, and there's no proper solid waste management. So, it's just going to get worse day by day if things are not put into place.
This is no solution, Sonia, just to say blanket ban. In fact, I think the state is already working on it. There's a blueprint which is already ready. So they will, of course, go and appeal. I think this will soon be overturned. That's my personal feeling. So what you'll have today is perhaps
maybe
a
softened.
bit of a
I don't think they'll overturn. I guess they will soften, give more time or something. But very often in our country, we only reform under pressure. The Reserve Bank puts a gun to your forehead and says that all of you go to the NCLT, and then people start making serious deals and don't do bad deals. I guess it is these autonomous bodies, courts and regulators, who are forcing change on us.
Absolutely. Change that is much needed, I guess. Rima, what about L&T Infotech? Why are we watching that stock today?
Because there is going to be an offer for sale today. So the promoters of L&T Infotech is, Larsen & Toubro, and they've announced that they will offload up to 6.08% stake in L&T Infotech via an offer for sale. The base book is 3.4%. There is an oversubscription option of 2.7%. Floor price is at 1700, so about a 6% discount where the stock closed on Friday, which is 1798. The promoter holding currently is at 81.5%. If they sell the entire amount, base book plus the oversubscription, then the promoter holding can come down to 75.5%, which is pretty much close to where they have to bring it down to. SEBI mandates that promoter holding should be at 75%, so they would be at 75.5%. But that said, the company has time till July of 2019 to comply with these listed norms. The stock has been a big outperformer, a 60% rally on a YTD basis, but today on account of supply pressure, it could be in the red.
Okay, thanks a lot for that. And now for a bunch of other stocks, Anisha.
Well, yes, I'll start with Gammon India, wherein Union Bank has made a plea to NCLT to admit it into the NCLT thing. That is because they owe around 315 crores to Union Bank. So important to see whether this will get admitted and what is the money that lenders could really take out of this one. But moving on to Ramki Infrastructure, wherein they have executed a share purchase agreement, wherein they are looking to sell around 100% stake in NAM Expressway Limited. They'll be getting around 140 crores as a result of this transaction, which will be used to pay down the debt of the company. Moving on to Graphite India, wherein one of the subsidiaries of the company has made an acquisition, and this one is in the Netherlands, and they're looking to invest around $18.6 million for that. So a good use perhaps for the money. That is what the analysts say. So a bit of green tick on that. And lastly on IGL, wherein they have taken a price hike. Now this is important because usually the company takes a biannual hike, that is 2 times in a year, and this is out of turn, but it will help the company's margin given the rupee depreciation that we have seen. Back to you.
Okay, thanks a lot, Anisha, for that. So here's a quick recap of our top stocks to watch. Stocks with positive news flow. We have Torrent Pharma, Ashok Leyland, Tata Motors, M&M, Wipro, Union Bank, Ramki Infra, Graphite India and IGL. While stocks with negative news flow this morning, you have Maruti, Hero Motocorp, Escorts, ICICI Bank, SBI, PNB, Bank of Baroda, Yes Bank, M&M Financial, Shriram Transport, L&T Finance, real estate stocks like Suntec Realty, Godrej Properties, Kolte Patil, Capacity Infra, as well as L&T Infotech.